Brilliant, okay. Welcome all. Emergency exit there. Hop out the window if you need to. The general format of today is not going to be 5 simple presentations from 1 to 2 to 3 to the end. There is little benefit to that. The whole point of being here today is not just to hear from the experts, but to grill them, to tease things apart, to fill your own knowledge gaps, and to maybe even present some novel ideas. And who knows, maybe even work together in the future to build something brighter and better. All towards restoration, all towards conservation. So as I said, the format will be 4 very brief presentations. Well, there'll be an intro from me and 4 brief presentations from our 4 panelists here. You'll note that there's an empty chair over here. Adam Gibbon is the ghost sitting here. I'll get to that now in a second. So we'll have 4 very brief presentations from our esteemed panelists, and then we're going to have a brief discussion amongst the panel themselves, and then we'll open it up to the floor. The intention is to have at least 30 minutes of engagement with yourselves today. Like I said, there's no point in us just spewing information at you. This is not a learning session, this is a collaborative building session, okay? Right, if I can move forward on the slides, let's see if they work. They do, okay, so, bit of an aside. I spent too much of my childhood playing something called Age of Empires. And oftentimes you found that when you were attacking a castle, it looked great to have a big army full of uniformed soldiers, and they all had a single sword, and they all attacked the castle. But you needed loads and loads and loads of those soldiers to break through the walls. However, if you had a diversified group of soldiers attacking that same castle, attacking that same problem, you achieved it much quicker. It was much more efficient. You had fewer soldiers, you spent fewer amounts of wood and stone and gold in building that catapult, but it was much more effective. In other words, a blended approach was much more effective than a singular monoculture approach to attacking that castle. So in a way, biodiversity conservation is like that challenge. It's attacking that castle. How do we get through those walls? Where are those difficulties, and how can we find the chinks in that armor to get through there? The best way of doing that is through a diversified, blended approach. Some confused faces in here, but there's some also familiar faces. Okay. The other important thing to note about this, and this reflects on some of the stuff that we talked about yesterday and other panels raised, is the fact that the SDGs we have, and we've actually cut off the very bottom of that, but never mind. This is the classic wedding cake diagram of the various SDGs, so the 17 SDGs. And you can see that the 4 biosphere-related SDGs support everything else. If they don't develop, and if we don't achieve the targets of those 4 SDGs, then we're not going to effectively or at all achieve the society or the economic ones, or indeed the partnership for the goals, 17 at the very, very top. And that's important to note too. So I don't need to remind everybody in this room the importance of biodiversity, but just to reiterate that it's not just about nature. Although I am quite ecocentric in my worldview, there's very, very many people, in fact the majority of the world, that are anthropocentric. So doing it for the sake of humans, supporting all the rest of society and the economy and the partnership through the ecocentric, through nature. And that's one way we can achieve that, is by demonstrating that it helps us along to many, many other goals. I'm not going to go too deep into this because we're going to talk around this as well, but this is what we're trying to achieve in Ireland at the moment. So we're trying to approach financing of biodiversity through this blended means. So not just approaching it as a top-down, please government give us some more, we need to do more work, we need to block more drains, we need to establish more protected areas, we need to build more fences, something as simplistic as that. We need to approach it in a creative and I suppose an ambitious way that hasn't been done to date. Peatland Finance Ireland is one of these approaches. So we're now approaching the restoration of peatlands in Ireland particularly using this blended finance approach. We're looking first of all at public investment, and there's significant amounts of that already, but there is more to be mobilised. There's carbon credits that are starting to emerge. Now that is not simple, as we all know, and we'll learn a bit more about that later on. But there's also huge, vast amounts of commercial finance. And they go not just in the M numbers, but to the Bs and the Ts, the billions and trillions. There is significant investment potential out there if we can tap into that. Even in drops, it would do a huge amount in Ireland and further afield. So what we're looking at is approaching this through 4 different ways, through energy, forests, water and agriculture. If you think about it, peatlands in particular, that captures almost all of the peatlands in Ireland. We want to try and deliver 4 key services or nature-based solutions, if you will, or any of the other words you want to use, ecosystem services, So carbon, biodiversity, and water and livelihoods. Now the point here is not to eventually look at these individually, but to combine these into some sort of bundled ecosystem service. Really very, very powerful, not only because it actually achieves things, but because it's really, really appealing to those large-scale investors that I talked about, who don't want to simply focus on carbon or water. Biodiversity, livelihoods, much harder to, first of all, quantify and also to measure. And have you reached that metric? Have you achieved livelihoods? Have you achieved biodiversity enough? What is enough? When do we know we get there? That's where the National Biodiversity Action Plan comes in. Okay, we'll get to this a little bit later on as well. Click. Okay, the other example of this that we're working on in UCD specifically is Waterlands. So Waterlands is approaching an EU-wide restoration goal of wetlands in particular. Click, there we go. It's pretty big, 32 partners across 14 countries. I'm going to skip through it quite quickly here. The Waterlands network includes 6 action sites. Now the purpose of these action sites is not to simply look at the ecology of these sites, but to look at the ecology, the community, the governance that supports that, and fundamentally the finance that allows all of these wheels to turn, that greases all those cogs. Because as much as I would love to live in this socialist utopia that we all aim for, we don't. We currently live in a neoliberal capitalist model, and if we want to get stuff done, money matters. So that's what hopefully we're going to talk about today, how we can mobilize additional funding, how we can look at the blended elements around that, and how we can make it work a lot better than it has been thus far. Okay, so without further ado, I'm going to introduce our panel. The first speaker today is Dr. Suzanne Nally. She's the head of the peatlands unit of the National Parks and Wildlife Service, and she'll be speaking first. Number 2 up is Dr. Renee Kervliet-Hermand. Closer? Closer, okay. She's with the IUCN UK Peatland Programme, and she's the coordinator of the Peatland Code. Some ears pricked up there. Number 3 down at the end of the table, we've got Mr. Paul Chatterton. He's the co-founder and lead of the Landscape Finance Lab, based in Vienna, amongst various other cities around the world. And then online somewhere, as I look up to the sky, we've got Mr. Adam Gibbon, who is with AXA Investment Management in London right now. So thank you very much for joining us, Adam, remotely, as I speak up towards God. Okay, so I will introduce Suzanne. We'll go for, as I said, 7 to 10 minute presentations from each one of our 4 panelists. We'll break out into sitting here and talking around some key decisions, or key questions at least, and then opening it up to the floor. Okay? Great. So, over to you, Suzanne.
Thanks very much. Hello, everyone. So, as Shane said, I'm not a doctor, unfortunately, but I am a director in the National Parks and Wildlife Service. So, I'm leading on that programme of, I suppose, ecosystem transition and recovery for protected peatlands, in particular in Ireland. And we use a variety of funding sources and models to ensure the restoration of our protected peatlands. So today I'm just going to outline for you, based on our experiences in NPWS, the challenges, the opportunities, and contemplate what the future might hold for the financing for restoration. Okay, let's see, can I get this working? Okay, so I set out at yesterday's opening session. You may be aware that many of Ireland's habitats and species are in decline or under serious pressure and threat, and this is for a variety of reasons: changes in land use, climate change, pollution, invasive species, etc. So this degradation in the quality of nature directly impacts on biodiversity and other people, of course. So what have we been doing about this? So as part of the EU biodiversity strategy at a European level, the EU legal framework for nature restoration is proposed to be strengthened to put Europe's biodiversity on the path to recovery by 2030. In Ireland, our National Biodiversity Action Plan, which is a whole of government plan, contains a series of actions to conserve and restore biodiversity and our ecosystems. But how can we translate this plan into actions on the ground? So on a national level, it's about carrying out the right actions in the right places. It's targeting measures at those areas that are of high conservation value in view of achieving the site level conservation objectives for those species and habitats for which the site has been designated. So we need to invest in nature. By investing in nature restoration, we are investing in the future of humankind, essentially. And with that comes associated benefits like climate mitigation, adaptation, and other ecosystem services like tourism and culture. By not investing, we are putting at risk our future biodiversity and further losses of fines of not adhering to legal frameworks and impacts on society as a whole. So we need high quality restoration measures being undertaken on our sites, on nature sites. And we know in NPWS essentially as well, through research and experience and practice, how to achieve this. So the EU Biodiversity Strategy sets out that at least 20 billion a year should be unlocked for spending on nature. So Ireland's prioritised action framework, published last year, sets out Ireland's priorities until 2027 for habitat and species protection and restoration in Natura 2000 sites, that's special areas of conservation and special protection areas, and associated green infrastructure. So you can see the estimated cost of that within the period of the prioritised action framework there below in the slide. So the prioritised action framework is a multi-annual planning tool. So it's specifying the financial needs for the implementation of these conservation restoration measures and links them to the various EU funding programmes. So by prioritising measures, we are not only contributing to specific objectives of the EU habitats and birds directives, but also providing important socio-economic benefits to society. So how do we fund these measures, both within Natura 2000 sites and outside? So this can be achieved through a variety of sources of private and public funding at national and EU level, and through a range of different programmes. In Ireland, we can access funding for nature conservation and restoration through sources including the EU LIFE programme, Horizon Europe, Common Agricultural Policy Schemes, EU Structural and Cohesion Funds, Interreg, just to name but a few, and Exchequer funding, which the majority of peatlands restoration is funded for under at the moment, and LIFE programmes, and also with contributions from the Carbon Tax Fund, and also there's philanthropy and private funds. So there's many programme level initiatives such as the NPWS Farm Plan Scheme, EIPs and agri-environment related projects underway in Ireland. There's compensation schemes, there's financial incentive schemes, which provide support to those on the ground who are positively engaging in the conservation and restoration of protected nature sites. In line with this as well, there's a need for an extensive scientific monitoring and research programme to be undertaken, which informs policy and informs the development of these financial incentives and schemes. So I'm just going to outline a case study. It's an example of a state and private partnership for nature in a blanket bog pilot project in Wicklow Mountains National Park. So in this pilot study, NPWS and Intel have collaborated to re-wet 60 hectares of drained bog with the aim to increase water storage levels in part of the River Liffey headwaters by an expected 50 to 90 million litres. So these headwaters supply the Pulafuca Reservoir, a drinking water source for the greater Dublin area. So this project will also, of course, protect biodiversity, improve carbon storage, and is likely to improve water quality. So in tandem with such initiatives, there's commercial state companies like Quilcha and Bornamona are already addressing biodiversity in their business strategies also. So how do we go about unlocking this finance? So there's many win-win project examples in Ireland for biodiversity, for the people, for climate, but unlocking the finance can come with its challenges. So a significant portion of lands in Ireland where measures are required to be undertaken are in private ownership. And some lands, such as peatlands, have a complex array of property rights attached and various layers. So if the measures impact on a person's property rights, then there needs to be a fair and a proportionate programme in place to mitigate that impact. So this can include development of compensation schemes, land purchase schemes, financial incentive schemes, and so on. So as mentioned by many of the contributors yesterday, we need to engage and work one-on-one with landowners, with farmers, local communities, on site and in their area to promote restoration projects. There are financial models that can work effectively. So the NPWS, under the Life Wild Atlantic Nature, has assisted in the development of a results-based model, and you've heard mention of this throughout the conference to date. And this has been integrated into Ireland's CAP strategic plan. So the scorecards used there in the middle of the screen underpin the quality of the habitat, which is used as a surrogate for water quality, biodiversity, carbon, etc. And with the assessment of this, it's all grounded in good science. So it values what's already delivering important services such as biodiversity and incentivises the restoration of what isn't, including poor quality habitats. So from next year on, this will hopefully be upscaled to thousands of farmers across the coming period. So the Life Wild Atlantic Nature Project is also an action partner in the Waterlands project, which Shane referred to, that will restore wetland sites across Europe, which is worth over 2 million in the coming 4 years. So it's likely several funding resources will come online in the coming months to provide funding for various restoration, farming and community projects. And this will come from a range of sources, including corporate philanthropy, exchequer and EU likely. So for any financial or regulatory system that is put in place, there must be a governance and a verification and monitoring process around that to ratify the outcomes of the restoration measures. So the challenge here is first ensuring that any system established must be robust and has the necessary, I suppose, resources and expertise that is needed to deliver on the financial model. But like many other industries, there's competing demands for expertise, our engineers, the ecologists and operators who play a role in securing the funding, designing, development, verification and monitoring of projects. So we have to build capacity here. So how do we overcome these challenges? So you may perceive that much of the restoration efforts to date are state-led, and that's probably correct. But what is going to change, hopefully, in the future? As Shane has outlined earlier, NPWS, with Natural Capital Finance Facility of the European Investment Bank, co-funded a scope and study to explore the potential for establishing a financial model for restoring peatlands in Ireland and securing further investment. So this pilot study has concluded that peatlands restoration requires significant upfront investment, and that there exists an important opportunity for a possible Ireland Peatlands Code that would provide investment certainty for landowners. So I'm looking forward to hearing the next presentation on the Peatlands Code as well. So the second phase of this project will commence this year, will involve cementing a potential financial model and partnership and establishing pilot loans as the basis for a full inception and rollout in due course. I just want to make a distinction as well in the use of the term carbon credit, because it can often be misinterpreted. So a carbon credit is a permit which basically grants a right holder the right to emit carbon emissions, can then be traded essentially. But there's also, I suppose, what we're looking at is projects that can aim to reduce emissions and get compensated, and people can get compensated for their efforts via a voluntary offset system. So this is the latter aspect that could potentially be a model at work in Ireland for restoration. So there's work underway initially in Ireland on peatlands that could lead to a landscape level kind of action plan, an economic with investment scope and a roadmap for standards and certification that potentially could serve as a model for other future habitats that need restoration. So given the scale of the degraded lands in Ireland and across Europe, it will require significant funds and resources to be unlocked. However, several projects are underway and in development have shown that they are financial models that can work and are scalable on a landscape level. So there is hope for the future. In Ireland, we started off on a sound basis in 2022 with increased funding of 64% for the National Parks and Wildlife Service in the 2022 budget. And given the new action plan for NPWS, there's hope there'll be increased resources and capacity to progress our restoration programmes and to support landowners and farmers and communities in their efforts. So to conclude, wildlife is connected in complex communities, and restoring habitats does offer hope for recovery of species. So ultimately though, to succeed, we need to continue these interconnections, to enhance partnerships with other government departments, with state agencies, with landowners, with communities, and with financial institutions, and backed up and supported by academia. Okay, thanks very much.
Great. Thank you very much, Suzanne. Okay, I'll introduce straight away Renee, if you want to come up and give us a bit more of a broader picture on how we can apply this, or how it has been applied.
Thank you. Do I do something to get it going?
It's just right.
Yes, there we go. Right, thanks very much. So I'll try to do my name in English first of all. So I'm Renee Kervliet-Hermand, and I am indeed the Peatland Code Coordinator for IUCN UK Peatland Programme. So I'll be talking a bit more of what we're doing in the UK, kind of as an example of what we could potentially do in Ireland as well, with obviously tweaking and how we can scale that up to a bigger scale. Just To start off, so the peatland code is a UK government-backed domestic voluntary carbon market standard. So landowners that have eligible damaged peatlands, if they follow our code, then they can attract private finance for peatland restoration by selling carbon credits. And the peatland code is a very robust standard that gives assurances to buyers of these carbon credits that what they're buying is real, quantifiable and measurable. So just a bit of an overview of where we are at in the UK. So the peatland code helps companies to reduce their net greenhouse gas emissions. It helps UK to meet their the national greenhouse gas targets. So all our land-based emissions are reported on a UK level, so peatlands as well. So if we reduce our peatland emissions, it helps UK government to reach their Paris Agreement targets. It is about peatland restoration only. So it's not about healthy peatlands or carbon that's already stored in the peatlands, because that's not additional. And I can have a whole long conversation about that. I won't do that at the moment. If anybody's interested, we can do that over coffee. And the purpose of the peatland code is to underpin market trust and confidence. So the code started in 2011 with a report of quite a lot of big players in the UK, where they had a plan, an idea of how to get private investment into peatland restoration. Then there were quite a lot of pilot projects, and in 2015, the peatland code was launched. In 2018, we had our first validated project, and at the end of 2020, we created, together with the UK Woodland Carbon Codes, we created a UK Land Carbon Registry on quite a big international platform. And behind all of this, I can now say we've got a peatland code team. It's not just me anymore. I've got a second person in my team. There's an executive board, a technical advisory board, and we've got a market and investment forum. So we get feedback from all stakeholders. We speak to government. We get to make sure that what we're actually creating and what we're developing, because it's always in development, works for all players. So we currently have 97 projects. I was really hoping I could put 100 on there yet, but when that's the case, we'll definitely celebrate with a drink. We've got around 14,000 hectares of peatland restoration under these projects. A lot of our projects are at the moment under development and are going through validation, but we've got 15 projects that are validated at the moment, and they have just over 500,000 tonnes of CO2 emission reductions over the whole project lifetimes. Yeah, let's keep it there. Where do I need to? Right. So just as a step back slightly, so why are we actually doing it? So in the UK, we've got a lot of peatlands, like you've got in Ireland, but 80% of our peatlands are in a degraded state. That's shocking, and a degraded peatland emits vast amount of carbon, but if you actually have a healthy peatland, obviously it can store a really a lot of carbon as well. So with peatland restoration, we can block our drains, we can raise the water table again, we can revegetate, and we very quickly reduce those emissions. And that's what we're selling. We're selling the emission reductions through the peatland code. Sorry, I'm really struggling with this. Ooh. So just very briefly of how do we actually do this, how does it work? So under the peatland code, we have condition categories that we use, and all of these condition categories have emission factors next to them. So they are currently actually on a revision. So it's the latest scientific evidence that's backing these emission factors. So we go, the worst bit that we have is actively eroding, which can either be flat or hags. You can have really big hags and gullies. The next step is drained, modified, and natural. So what we initially sell is only one step change in condition category. So if you have an actively eroding peatland and you restore that, we assume you only go to the drained. So that's just to make sure that we initially do not oversell any carbon credits, because we know that first step is always, as long as you do it right, that's pretty much certain that you will get that. And then obviously we do have verifications in place to check that that's actually happening. then how does the whole cycle work? How do you actually then get this finance into these projects? So first of all, obviously, a project needs to register on this UK Land Carbon Registry. Then the project does the design. So we get landowners coming to us. At the moment, we don't actively go look for projects. So landowners, come to us. There's a duck in the room. Right, sorry.
It's a biodiversity conference.
It is, yes. Yes, so the projects do the landowners, or with the help of a project developer, they do all the mapping, they do fill in all the project design documents, emission calculator, additionality calculator, so they need to show to us that they need the carbon finance to make the project happen. There can be an element of public finance in there, but they need to show they have to have the private carbon finance to make the project go ahead. That then all gets validated, and we issue pending issuance units. So those are they're kind of an expected emission reduction to happen over time. These can be traded. So if a project needs to get finance in at the start, they can sell pending issuance units. They can also hold on to them and sell them later on. Then they do the restoration. That restoration is validated again by an independent validator, so third-party independent validation. And then at year 5, and then every 10 years is when we do verification. So that's, again, independent third-party verification that the site is indeed in this next condition category that we assumed at the start. If that's the case, these pending issuance units, so those chunks, get verified into verified peatland carbon credits. You can sell, as a landowner, you can hold on to them, you can use them for your own insetting, or you can sell those carbon credits either as PIUs or verified carbon credits. You can do that directly to an end buyer, or you can use a program. So that's how we get this finance into our projects. That was a very quick whistle tour of what we're doing, but thanks very much.
Thank you very much, Renee. Fascinating stuff. Clearly not as simple as we all presume it is, but it's possible. I think that's important, that it demonstrates that it is possible. Okay, I'm going to introduce Paul Chatterton now from the Landscape Finance Lab, who's going to make it a bit bigger again. Okay, off we go.
Thanks, Shane, and I'm delighted to be here. This is a magical place. I've only been here once before, and then a conversation that we had triggered the establishment of a $50 million business incubation and investment fund in Fiji, would you believe? So who knows what will come out of today. I want to talk about landscape finance. I want to give you a bit of an introduction to that. To use Shane's metaphor, there's some fabulous work going on here, and it's like the rest of the world. We're winning lots of battles, but we're fatally losing the war when you look at the statistics. We have to change the game completely. And it's the project approach and the sectoral approach that's what's killing us. It stops us from working together, and it stops us working over long periods of time and over large scale. So that's why that's why the conservation world has shifted to the landscape approach almost entirely. But now the business and finance world is doing so as well. I was at a conference 2 weeks ago in London, one of the top investment conferences. Every single panel mentioned landscapes. It's becoming big business. And for Ireland, you guys are the new economic powerhouse of Europe. You've got an enormous amount of economic action happening here. And business and financiers want to invest in carbon and biodiversity. That's the really good news. So how do we put these things together, and how do we put them together at scale? Landscapes are useful for that because they allow people to work together in one area. Farmers, fishers, foresters, cities, energy production in cities can come together and work with a similar language. So they allow you to get that holistic action. And the good news is that this also allows you to get the bankers out of bed. They're not interested in anything that's less than 50, 100 million and upwards. And your average forestry or peatland or biodiversity project doesn't get anywhere near that. Putting them all together gets their interest, and I'll show you how that's starting to work out. The landscape approach we found when we published this book, the Little Sustainable Landscape book in 2015 at the Paris Climate COP, is found through all different sectors. The water sector, its catchment management; for farming, it's climate smart agriculture landscapes; oceans, integrated coastal zone management. At the bottom is really just 5 simple steps, it's the project approach applied by a multi-stakeholder partnership. You bring together the people in a landscape, and this element here, the 5 elements, are the way that you do the landscape approach, or at least this is our theory, which is now quite well tested by a whole range of different organisations. Bring people together, define the problem and possible solutions, set a vision, create an action plan, get the financing and take the action, and then monitor and learn. It's not rocket science, but doing it at scale does require some rocket scientists like Renee and so on to make this work. Importantly, you're planning for 20 years minimum. You're thinking over a long period of time and over larger scale. And what that does is allow you to put the immediate conflicts out into the future and give you more space to address them. So it allows people to come together. And if you do it properly, you're thinking natural zones, economic zones, and combined zones where you're restoring nature and getting production as well. Those 3 zones are critical. And they'll give you the SDGs. They'll give you the social, economic, and natural returns. But importantly, the return of hope. That's the biggest one that we're finding in these landscapes. In Fiji, that people are seeing the hope that their reefs might survive, and with them, half of their economy. So that's the landscape approach. And if you do that in a landscape, you get a sustainable landscape. That's the outcome. And if you do enough sustainable landscapes on the planet, you achieve the SDGs across, at least for nature. Landscape finance is a very new area that we're still developing. But this is a complicated graph. I'll take you through it. On the left-hand side are nature-based solutions. We want all projects to be contributing towards biodiversity, nature, climate, and so on. So that's the IUCN nature-based solutions methodology. But the more nature-based solutions you have in a landscape doesn't necessarily mean that that's better for nature. They can crowd each other out. If you put them in a landscape framework, they can all work together towards larger goals. You can address the synergies and any contradictions, any negative feedback loops that might be possible, and create financeable instruments that are now at the scale of hundreds of millions of dollars, euro, pounds, whatever currency you're using. What we're seeing as well, and I'll give you examples of each of these, is that you're getting funds that are investing in multiple landscapes across the world, and you'll see many more of these coming. And then there's thematic funds that will invest in forestry across a number of landscapes, that'll invest in water across a number of landscapes, that'll invest in energy, and so on. So that's the sort of architecture of this new world of financing. And I know that's a lot to digest. I'll give you some examples of how that works. So here's a couple that we've been involved in around the planet. I'll start with the oldest first. Down on the bottom left is a rainforest carbon program that does effectively the same thing as the peatland code, but for rainforests in the Democratic Republic of Congo. And you think it's difficult to do large-scale landscape programs? We'll try doing it in the Democratic Republic of Congo. But it's worked. It's really remarkable. This area is the size of, twice the size of Ireland, and the trees are coming back. There's forest protection, the water's flowing, women have to walk less distance. 170 million euros, emission reductions equivalent to the city of Cape Town. So quite significant. And that's the model that we're using for Peatland Finance Ireland, in fact. On the top right, in Indonesia, this is a landscape program led by a company, Michelin, the tyre company. They're rubber plantations. They're investing in switching them to be more wildlife friendly, more green, and restoring the jungle around them and supporting a national park. 215 million euros of investment, dollars of investment in that case. Not small, and that's fully for commercial purposes. There's no carbon in that one at all. Coral reefs, I mentioned, in Fiji, and we've just started work with the Scottish Government on a similar program to peatland finance Ireland, and that looks at an area in the very northeast of Scotland which contains more carbon, 400,000 hectares, than all of the forests of the UK combined. So it's a very sensible, and Renee knows this area well because she did her PhD up in that area. So there's a couple of examples of the sort of landscape programs that can be developed and which we're now trying to develop in Ireland. And Peatland Finance Ireland, you've heard from Shane about that. I must say this is one of the most exciting projects that we have across the world. And I really thank Deirdre and National Parks for the support that they've had there. European Investment Bank is getting behind that, and that's changing the game and making it very interesting for financiers. We've got a lot to do ahead of us, but we'll need a lot of help as well, all of your help in making this one work. Then I mentioned investment funds for landscapes. So we helped to design the Dutch Fund for Climate and Development, 160 million euro investment across 10 landscapes around the world in 3 continents. And that's taught us a lot. That's been really exciting. There's a whole range of these coming, and Adam will talk a little bit about this straight after me. So there's a rapid introduction to the world of landscape finance. Lots of benefits for doing this. It does reduce costs and risks. There's a lot more money out there that you can bring down for biodiversity. Creates all sorts of synergies and solves regulatory problems and monitoring problems and so on. It's not easy. It's very complex. It's new. We're still building the plane as we fly, but having a lot of fun doing it, and hopefully something will come out of it. I'm very confident that this is a game changer, not just for Ireland, but for Europe and for peatlands. So thank you.
Great. Okay, so we're building the story, right? We've started off small. We've looked at the particular challenges in Ireland. We've talked about some of the tools we can use. We've now seen how we can apply that at a much larger scale. Now we're going to talk to the people we want to actually engage with. And we've got one on the line here somewhere in the ether. So Adam, can you hear us?
I can. Can you hear me?
Yes, we can. I'm delighted. Brilliant. Okay. Do you want to try and move a slide forward there? And if it doesn't work, then I can click for you. So give it a go first and we'll see.
Let me try.
Amazing. You're off. Great. Okay. So take it away, please. So Adam Gibbon from AXA. Right. Off you go.
Thank you very much, Shane. If you wouldn't mind just muting, because otherwise I have to listen to the presentation myself as well. That's quite painful.
Okay, I think we've done that there now.
Yeah, that's good. Right, hello everybody. I'm very sorry I couldn't be with you here today. This is quite strange because I'm actually looking at the back of your heads. So if you do want to turn around and give me a wave at any point, that would make me feel, thank you. Makes me feel a bit more part of the action. So my name's Adam Gibbon. I'm the Natural Capital Lead here at AXA-IM. I've actually some experience in working on the Irish peatlands. I've only been with AXA a couple of months, but before that I was doing some consulting, and I worked up with Shane and Paul on the Financing Peatlands initiative that was described earlier. So I've got to know a little bit about this particular challenge in Ireland. What I'm going to give you today is a quick overview of investing in natural capital from an institutional investor's perspective. So with the short few minutes I've got, I'll give you a quick overview of AXA-IM, who we are, what we do, a bit about our impact investing practice, and then drill down into our natural capital strategy. I'll tell you about the biggest challenge I see today in investing in the space, and then I'll give you an example investment. The clues to where that example investment are on the screen at the moment. It's not Ireland, but there is some relation, as we'll come to later. So AXA-IM has been offering actively managed investments to its clients for over 25 years now. We're a relatively large asset manager, so we have over 800 billion euros of assets under management, and we have an ambition to be the world's leading responsible investor. So for our clients, we offer 4 main strategies. So these are fixed income, listed equities, and alternatives. And we also offer a multi-asset strategy which blends these 3. We try to integrate ESG, so environmental social governance concerns, across all of our offerings. But most specifically, when it comes to natural capital concerns, we have a new ecosystem protection and deforestation policy. And what this does is identifies companies that have had business practices which were detrimental to ecosystem protection or led to deforestation, and helps us screen those out of the investment decisions that we make. So now let's drill down a bit into impact investing. So impact investing sits within our alternatives offering. So my team sits alongside teams like real estate, who invest in buildings, forestry, who invest in more traditional forest assets. So the way we deploy that impact investing strategy is through a range of private equity, venture capital, and project financing offerings to our clients. We've been doing this for around 10 years now, impact investing. And in 2019, launched our 3rd dedicated impact fund, which was named the AXA Climate and Biodiversity Fund. And really, as you can tell by the name, had a focus on this natural capital theme. From that fund, we've invested into a number of what we call project developers. So these are people who actually implement activities on the ground to protect, restore, manage natural capital. Some of their names are over on the left-hand side there now, and we'll come on to some more examples later. But looking forward, we've had a commitment from AXA Group, which is our parent company, to invest a further 1.5 billion euros into the space to combat deforestation, reverse land degradation, and secure habitat for biodiversity. And of that, we expect around €500 million to be put into a new natural capital fund, which is what I'll be leading on here at AXA-IM. So what's our strategy for natural capital, and how do we make money out of this and have an impact as investors? Well, what we do is we target companies and projects that protect, restore, and sustainably manage natural capital. And within that, more specifically, we look for those entities that are proactively creating value out of their positive impact on natural capital. And that's through the generation of payment for environmental services. So to make this more concrete and to elaborate where most of our effort is today, that's on the creation of carbon credits. So if your company or your project or your NGO generates carbon credits, which generate a revenue stream for your business, then this is something that we might be able to come in and invest. On the screen now, I won't go through them all, but I've listed the target sectors that we invest in. And really, this is the whole spectrum of what we sometimes refer to as nature-based solutions to climate change. So of most relevance perhaps to the Irish context and what we might be interested in over with you will be afforestation, reforestation, and revegetation. And then wetland restoration and conservation. And that includes the restoration of degraded peatlands like the ones you have and protecting those that are in a good state. Regarding our approach, the two main pillars through which we will invest our 500 million euros will be through strategic equity and project finance. Now, over the last 10 years or so, there's been a real lack of investment in the capacity of companies to enact landscape protection and restoration at scale. There's been plenty of work going on in the not-for-profit space, but when it comes to investable enterprises, because of a lack of interest in these payment for ecosystem service markets, there hasn't been the development of the companies that we need. So for that reason, we'll be investing strategic equity to build the capacity of those companies. But where we want to put most of our money to work is in project finance. So that goes into financing the activities on the ground that will generate revenue flows from, as I said, carbon credits or other environmental services, but also other assets if done in a sustainable way. For example, sustainable timber or agricultural produce. Now, this fund has a long-term focus, yet to be defined, but it will be in the sort of 15, 20-year bracket, which is quite unusual for particularly private equity or venture capital funds. So we will be able to take part in investments and then stay involved in the long term, because we believe that to really transform land use on a landscape scale, you need to be around for the long term. And over the last decade, AXA's approach has shifted from what we call a fund of funds model, which is that where we take our money and give it to other fund managers to make investments, to more of a direct model, where AXA's team is actually directly investing in these projects and companies. And to do that, it's been necessary to actually build out an in-house team. And that's because to invest in this space requires quite a discrete, specific skill set. So you need to understand agriculture, forestry, carbon markets, often emerging markets if we want to invest in places like DRC that Paul mentioned. And my own career path is testament to that. So as I mentioned, I just joined AXA a couple of months ago. And my background is not the normal background that you might find within an asset manager. So I started my career in the sciences, doing remote sensing, carbon stock measuring from space, and soil carbon measurements in the Andes in Peru, before working for 3 years with an NGO as a carbon and sustainable agriculture and forestry project developer and auditor. I then spent 8 years as an investor, working for the first fund that AXA invested into in the natural capital space, before, as I mentioned, coming in-house with AXA a couple of months ago. I was asked by Shane to elaborate what I thought was the biggest challenge for investing in this space. And really the biggest one I see is having standardized investment structures. So as an investor, any opportunity that we look at is going to have several stakeholders involved in the operations. Now, sometimes these roles can be played by the same organization, but these roles always exist. So there's always a landowner, an operational developer. So that's the person who is, say, planting the trees or repairing the people, making the change on the ground. There'll always be a technical developer. So who does all the documentation around the carbon standards, like the peatland code that we were just learning about? Someone has to do that work. Someone has to then take the environmental services to market. So if that's carbon credits, they have to sell them. There'll always be a financier, or maybe multiple ones. So that's our role. And there'll be other stakeholders as well. So that could be government, for example. If it's government land or government has interest in that land, or it could be, if it's government land, it could be other users of that land, so local communities that are involved in that land. And whilst on the ground, there are plenty of landscapes that are interesting for investment and so much work that needs to be done. What we don't often have are structures that we can invest through that tie all these parties together, that align their incentives and fairly reward everybody involved for the risks that they're taking, for the sacrifices they're making, and the work they're doing. So if we were in another sector, like that's a bit more advanced, like renewable energy, and I wanted to invest in a wind farm, for example, there'll be textbooks on how you do this, and all the different financiers that come and do different stages of the investment, and everyone would really understand the asset. That's just not the case here in natural capital today. So this is where we spend a lot of our time working with people like Paul and Shane to put these systems in place so that we have structures through which we can invest. I'll finish on one quick example. So this is an example transaction that we did from the AXA Climate and Biodiversity Fund, whereby we committed $11 million in equity and project financing through a green bond to an Indonesian company called Forest Carbon. And what they do is they develop reduced emissions from deforestation and degradation, so RED, and peatland restoration projects. So I'll come on to one example that's on the right of the screen there. But what they do is they do this in order to generate voluntary carbon credits. So they use an international standard known as the VCS, which is analogous to the woodland code and peatland code that we just heard about. They have a very tech-driven approach. So they use remote sensing and camera traps and listening posts on the ground to detect changes in landscape and biodiversity. And with our financing, we'll be able to expand the projects that they've been doing across the archipelago of Indonesia. The first project that they developed is called the Sumatera Marang Peatland Project. So there were 22,000 hectares of peatland forest, which had been logged, drained, degraded, and set on fire. So it was in a pretty sorry state when the project started. But thanks to the inputting of dams, of control on unauthorized access to the site, and fire monitoring and fire suppression systems, we were able to we've been able to re-wet the peat and allow the forest to recover. This has generated over 40 jobs for local community members. It's protected over 100 endangered, threatened, and vulnerable species, including the beautiful Sumatran tiger that you see pictured there. And will have a huge climate benefit because of the high carbon density of peat, the avoidance of its degradation and loss through fire, as well as through the rebounding forest. Over 1 million tons of CO2 will be reduced annually. So I will finish there, and thank you very much for your attention. Sorry, Ken, I couldn't be there, but look forward to listening in and participating, if possible, in the forthcoming discussion. Thanks very much.
That's brilliant. Thank you very much, Adam. It's great to have the opportunity, and thanks for making it work, and thanks for the tech guys for making it work so smoothly as well. I suppose what this demonstrates first is that it is possible at scale, but that it needs to be at scale, and that also fundamentally you need to speak the language, because I don't know about you, but I was kind of bamboozled by some of the words and some of the terms used there. And unless we can bridge that language gap, that conceptual gap, then we're still going to remain at a distance from all of this opportunity. So that's hopefully what we're going to try and tease apart now. I've been asked to address a couple of key points from the organisers of the conference. So we'll do that now in panel form, and then we'll open it up to the floor. Remember that if you're on the digital platform, indeed if you're listening remotely somewhere, you can submit questions on the web app using your magic link that you've received, which does work. So do please continue to submit Q&As or simply raise your physical hand when the time comes. So what I'll do is reach over and turn the microphone on if this works. It works? Great, and you can mute the other one. Brilliant. Okay, so I'm going to have a seat Gay Byrne style, and first of all, get to some of the key considerations or barriers around achieving this. So it's all well and good putting up slides, and it looks ideal, and it's happened in Sumatra, and it's happened in the Congo. How do we make it work in Ireland? And I'm going to ask the panel, first of all, having seen your conversations or your presentations and heard Adam talk about this, one of the key challenges I see is language, is understanding that, and is communicating a story, which I think ultimately encapsulates a lot of this, effectively, and that isn't intimidating. The M's, the B's, the T's, they can be very intimidating concepts, but nevertheless, it is happening elsewhere. And if we don't understand it ourselves, then we tend to miss that boat a little. So if I can ask the panel, how do you think we can overcome that language barrier and create a better story? Who wants to take that? Anybody? Paul, yes, go ahead.
One part of it is technical, I think, Shane. There's that whole world of retooling around scale, and the engineering world and the finance world can help us to do that. But it means we've got to learn a bit of their language. It means there's a whole lot of training that has to be done, and we're doing that with Waterlands, the Waterlands program. But another part of it is making it comprehensible to people as well. And if you talk about bogs to most people, it's not the thing that gets people excited. But if you mention to them that Guinness and whiskey come from bogs, suddenly there's a story there. And there's a whole set of other stories here in Ireland about the peatlands. Making that exciting is the challenge, is the next part of the challenge to drive. It's that return of inspiration to drive the action.
Yeah, I mean, we don't all have Sumatran tigers roaming around,
I can add something slightly from a peatland code perspective. So the feedback that we get from a lot of landowners is that's too complex. It's really hard to actually do it. But it needs to be slightly complex because it needs to be rigorous, it needs to be robust, so you actually know that what you're selling is real, it's quantifiable, and that the buyers have the trust, because if you lose your buyer's trust, then you have no finance and all of it is gone. So I do think the peatland code is definitely, it's not easy, but if you look at some of the international standards like VCS, it's easy, like what we're doing. What we're asking our landowners to do is nothing compared to some of the international standards. But we obviously need to communicate that and in the UK, we do now have a lot of project developers that can help landowners to actually do this. And I think you need some of those intermediaries that speak both languages, that can help people on the ground, but that can also speak to the investors and speak that language. And I think expecting landowners to be able to do that is like that's unrealistic, and I think we are still sometimes struggling with actually speaking both languages. So it's hard, but getting the right people in between, I think, is what we need to get that.
Yeah, I agree with Renee. It's about kind of bridging the gap between the science and with the landowner, with the person on the ground. It's about getting out on the ground. It's about meeting people and explaining the science in a kind of a simple, more kind of, understandable way. Like you really do need to be out there meeting people. You need to be education. It needs to be kind of a dual approach. Like landowners, when they're looking at peatlands restoration, say they're worrying about the impacts on their site, and then they're worrying, in terms of like, how's this going to affect my land, which is an asset as such. So and what can I potentially gain from this as well? So it's about bridging that gap. It's about communications, as you say. It's about interpreting the science in a kind of a more kind of user friendly way. And making those connections as well between the investor, between the landowner, between the scientists as well.
Great, thanks, folks. I agree with that, and it's a pity that right now there's a community session happening in there, because to your point, Suzanne, I think some of the most important people to attend a session like this are sitting just in behind that wall there. So if I shout a bit louder, maybe they can hear and glean some information. Because otherwise it remains in rooms like this. It remains in the ivory tower elsewhere, in banks or in conversations that we don't understand. Someone alluded there to certainty and to having that level of certainty that you can communicate in a trustworthy story. And in our conversations over the past few months, and even in the pub last night, we realised that level of certainty, or that definition of certainty, is very different between possibly the room here versus Adam and all of his cronies elsewhere. And then all the people in between. And crafting that collective story and communicating that language and using that word of certainty brings some challenges, and we're going to have to overcome that, I think. Are there any ways that we can bridge that certainty gap between scientists needing 3 years to validate something versus an investor looking for something in 3 months?
I think, so what we did in the Beeline Code, our emission factors when we started, they were not perfect. We were not 100% certain. But we try to be conservative and underestimate so that you know what you're selling is at least there. And I think we need to, like, as long as we know that the direction and that what you're doing is improving and it's definitely an enhancement of and you can sell it, that's okay, but we need to be obviously being on the conservative side. And I think then we can bridge that gap.
Adam, any thoughts on that?
Yeah, can you hear me?
I can indeed. Perfect.
Great, thank you. Yeah, I mean, I must say, I think the carbon standards, if we talk about the certainty on the carbon side of things, the carbon standards have existed for over a decade now and have had an awful lot of scientific and civil society input, and actually do work reasonably well for investors, as was just explained. You know, the approaches to conservatism throughout the process, where accuracy can't be 100%, we can be conservative. So I think to a large extent that does work reasonably well for us at the moment, and there are plenty of investable opportunities.
Great, thanks, Adam. There's questions coming in on the Q&A as well, so that's fantastic. We'll get to them as the time comes. Another one of those considerations and barriers I just noted down as I was listening was the idea of additionality and also the legality of that. And again, this is something that is likely going to raise its ugly head in the next couple of months. So additionality, I might actually appeal to the board to define that a bit. I mean, I can indeed, but you guys would be better positioned. And then how we bridge some of the impending changes to legality and how we get across that, or whether we can at all. Who wants to take that? Okay, well, I'll pass it across to Renee, but
So you want me to explain additionality? Is that okay? Well, you need to show that your project would not have gone ahead as business as usual. So you need to show that your investment or your carbon investment or whatever the standard you're using is making that difference. And that can be, it's not just the finance, it's also, it shouldn't happen legally. So there should not be a legal reason for you to restore your peatland, for example. So in the UK, you've got, for example, planning permissions, like they quite often legally require a developer to restore their peatland. Then it should happen, and your carbon finance is not what makes it happen. The law makes it happen. And that's obviously crucial, because if you're starting to sell offsets, then we need to know that those emission reductions or the sequestration that's happening was over and above business as usual. What was your second question there? There was something about legality.
The legality of that. So if this becomes a restoration law, so we're now obliged to do it, is there additionality around it?
Yeah, that was the conversation last night, wasn't it? That is going to make it hard, because if there's a law in place that tells you need to restore X amount of peatlands, then we need to think really hard how that then works with your additionality. So, and I don't know the specifics of this law, and I don't know if anybody knows the specifics at this point. With additionality, sometimes you can kind of work around if it's not towards specific areas. So if it says you need to restore this specific area, then that's obviously non-additional, because then that should happen. If it's more general, then potentially, but yeah, we need to, I don't know the specifics of that, so, but that's going to be a challenge, yep.
Yeah, Suzanne, I might ask you to come in on that if you can. Just in terms of the community acceptance of these kind of programs, given that there's additionality and that's complex and it's hard to communicate, and that also there's now uncertainty potentially around restoration law and legality Do you think communities and those that the NPWS engage with from a landowner perspective will still buy into that now, or will they wait for 10 years until something more solid is in place?
I think the communities will buy into it now. Well, some of them anyways. Like there's a growing recognition of the value of conservation and restoration now, and people see it from the climate angle as well. Like we need to halt emissions straight away. We need to, like in terms of peatlands, we need to re-wet, and we need to do it now. So if there's, I suppose, a funding mechanism in place that benefits landowners and also ensures the long-term, conservation of the particular habitat, I think people will buy into that now. But look, there's a huge uncertainty around the nature restoration law. We don't know what impacts it's going to have in Ireland yet. It's still a proposal, and Ireland still has to, I suppose, see how that's going to impact on our own, I suppose, restoration objectives. But look, there's a huge amount of work to be done in Ireland in terms of restoration. Just peatlands alone, we've over a million hectares of peatlands. I can't see it just personally whether that every hectare of peatlands has to be restored under nature restoration law, but we'll see what the future holds.
Yeah, very interesting. Thanks. Hopefully there will be buy-in, and hopefully it will come sooner rather than later, and that it will be quite clear to communicate. That brings us on to one of the last points in terms of opportunities that I'd like to talk about with the panel first, and then we'll come out to the many questions coming in. And that's around the standard investment structure that, Adam, you spoke about, and having something very clear and almost immutable and transferable from case to case that is the same and that is understandable and that is very clear and transparent, but it's based on clear standards, on clear protocols. I spoke to someone earlier about a company that they work in, and it's an accountancy firm, and they've got big books full of standards that they follow, and they republish it every year, and that's how the system works. And this is the system we're aspiring to, but we don't have those standards in place yet. So we're trying to, I suppose, run before we can crawl in some circumstances. So Adam, I might ask how quickly you see these kinds of investment structures, a standard investment structure emerging for the likes of peatlands or forestry in the Western world.
Yeah, thank you. As you say, if we want to get a mortgage on our house, the market for that is very clear. Like we know what our asset is, the house. We know roughly what rates of interest, although they keep going up now, a bank is likely to give us for that. That just doesn't exist today. I think my most important message is that we just need to get started. This work can be done somewhat in abstract. So to be honest, there is all the financial literature and textbooks available to tell you how to do this type of investment in theory, or how to construct a perfect investment. But that's on paper, and the world is messy. And as I explained earlier, and you said, Shane, we all have an incomplete understanding of the full picture. No investor's fully going to understand what it means to be a land user of peatlands or a farmer in Ireland. Likewise, they're unlikely to understand the ins and outs of finance or carbon standards. So I think what we really need to get doing now is moving, like start making investments, even if the structures are not perfect, a little inefficient, but let's get moving and get some done, and let's learn, start small, and go bigger. And that's what we've tried to do. As I mentioned in that forest carbon in Indonesia one, that was actually the second investment that I've made into that company. The first one was 5 million, it was smaller. So we can build up over time. What we just need is that willingness amongst the parties to try and make something work, and then patience with one another as we understand the specific situation that the stakeholders find themselves in, and as you said, learn the language. Having moved from the NGO space to finance, I'm very sympathetic of the difficulties of understanding the finance world. So yeah, we need to take our time and be patient and explain. And I think the thing we can do on that the most powerful thing we can start there is just say in plain English what we want. Like, you know, I've got money I want to deploy into investments. You don't need to worry today whether that's equity or debt or what your collateral is, etc. If you don't understand those concepts, but you need money for what, you know, and what revenues might that bring. So just start having that conversation in plain English, and then see where it gets to.
Great. Thanks for that. I've just been informed that I can't be heard if I don't use the mic, so I'm now going to diligently use the mic. That brings me on to a final point at panel level that I'd like to address, and that's in terms of the investor expectations here. In that the investors, like you say, are going to increasingly be a lot more honest about what they're looking for and what they have on the table. But at the same time, it'd be great to get some honesty around what they're expecting in terms of returns. So is it a 15% return on carbon and water, or is it something a lot more modest that can actually be grasped a lot easier by communities or by governments? I might ask the table first and then go to Adam in terms of what the realistic expectations of returns are from these.
Well, from that conference I was in a couple of weeks ago in London, what I was hearing is that investors do want returns, obviously. That they're not giving, their job is not to give away money. Well, they want to get it back. But they are willing to get carbon credits back as one of the returns. So it doesn't have to be the money back. They can get the credits and then they sell those on, or they're committed to buyers. They're also willing to purchase biodiversity credits. And there's no such thing yet, but you know, the LIFE project that we saw presented earlier is an excellent model that could be, that could do that. So there's this new world of money, of financial returns, carbon returns, biodiversity returns. If you can create a box that produces all of those in the peatlands, I think that's going to be very saleable indeed. And how to make that meaningful for the people on the ground, exactly Suzanne's question. For farmers to get loans now, they're going to have to start to show that they're reducing the carbon emissions on their land, just as every other business does. So the easiest way to do that is to protect peatlands. In Scotland, they found that if you decarbonise every part of your farm apart from peatlands, you'll only get a third of the results of just acting on peatlands. So it's by far the most efficient way to lower the carbon output of your property. So linking it to the real needs of real people is going to be a part of all of this.
Yeah, like I think investors definitely obviously want to return on their money, but there's other benefits as well for them from participating in such investment as well that would maybe chime with their own company or their own corporate objectives and whatnot. I still think that investors will need proper assurances and verification, and in Ireland that might be a little bit more complex because for certain habitats we may not have those emissions factors or data just yet, so that may take a bit of time. So there needs to be further kind of research in some areas for sure. Like I think we can estimate some of the factors, but not all. Not all for certain habitats in Ireland. So yeah, I suppose investors are looking for certainty and return, and I suppose as well many companies are keen to engage in such kind of green expenditure and initiatives.
Great. Thanks very much, folks. It's good to get a more rounded picture of what the realistic expectations are. What I'd like to do now is open the floor. There's already, oh God, there's dozens of hands. Jesus, maybe we won't. What I'm going to do first is go online, if I may, because there's people that have already submitted some questions online. So first of all, Niamh Garvey got in very, very early, 18 minutes ago. Thank you. And she talks about how the voluntary carbon offset market seems to be the main source of finance in the examples given. Do the panelists see any potential of private financing that doesn't rely on offsetting? I think we may have addressed some of that there anyway, but any further comments on that?
I could take that if you can hear me.
Go for it.
Yeah. So I think for the investment strategy I outlined as the person with the question highlighted, a voluntary carbon market, or in some cases compliance as they emerge over the years, are likely to be a source of revenues. But that doesn't have to be the case as long as we're still having impact on the ground. So as an investor, we just look for what revenue streams are available. So if you are doing tree planting for timber or agroforestry, then very much the returns from that can be part of the return for the investor. Now, if carbon credits are available, that's great because it's a diversified revenue stream, and perhaps that reduces the risk and therefore decreases the cost of financing. But I think the reason perhaps there's so much talk about carbon at the moment is that for the last decade that I've worked in this space, the price of a voluntary carbon credit has been $1 to $3 or something like that, and they've been very hard to sell, and no one's really been that interested. So it wasn't particularly transformative in terms of the type of land use that people could adopt and the revenue streams they could generate. Now we've seen voluntary carbon credits move to sort of $5 to $15 per ton. Compliance grade credits have gone even higher. So with those new prices, it can actually make a difference to what people are able to do. You've got new options for how you manage your land, because if you're sequestering carbon or avoiding emissions, you get a new revenue stream, which actually now has a material value. So if you strip out carbon, then all the usual forestry and ag investors can invest in your activities. That's absolutely fine. But I think we do hear so much about carbon because it has that catalytic potential to do new types of land use and generate new business models. And let's hope these prices sustain, and therefore we can build robust business models and investment strategies off the back of it.
Yeah, thanks. I can just add to that in the UK, so the peatland code was purposely not called a peatland carbon code because we've always had intention to include other benefits like biodiversity, water quality, water quantity. But when we started, carbon was the only one that was relatively easily quantifiable. We are now looking strategically at how can we include biodiversity, actually quantify biodiversity as well, and get some metrics also for water quality in place that we can start quantifying that and potentially either, at the moment we bundle it in with the carbon, but we could look at if that's like the best way of investment, or if we should pull it out and sell biodiversity, carbon, water quality separately. But I think there will definitely be more of a market for nature-based solutions that's not just carbon in the future. Yeah.
Great, thanks very much, folks. Have we got a roving mic that we can do questions with? Brilliant, we do have one. Excellent. So I will take a question from the room first of all, and gentleman at the very back had his hand up very first. If we can get it's my mic that's going down, is it? You've only one microphone. I'm the roving microphone. Okay. So go ahead.
All right, how you doing? Bill Callan, Department of Agriculture. Just look at the first is kind of an observation. The second is to give you people an understanding of what we're doing in the space. And the third is a question maybe for the thing, so apologies if I go on. Number one, I think just in terms of that overall, I think Adam's latest intervention was important for people to understand. When we talk about the carbon market here, and it's something we're working on in relation to carbon farming, we have to differentiate between what will be a compliance carbon market, such as through the ETS, versus a voluntary carbon market. So people's expectation here has to be managed. Fair dues to Adam for referring it to at the end in terms of that price differential, because I think it's important. For us, we have committed in the Climate Action Plan to develop a carbon farming model, and we are enthusiastic, and I do believe the finance will come in relation to it, what we're trying to do. So I have a group internally that's looking at the various elements, whether it's baseline, verification, certification, finance, all those aspects you have to put a framework in place to deal with. So in terms of the baseline, we've invested in relation to National Soil Carbon Observatory. So these are machines, they're carbon flux towers. to better understand the inventory from a national perspective. And we have the highest density in Europe now of these machines. We have about 27 of them around the country, which are measuring effectively the carbon flux in and out of soils across different soil types to get a better understanding of that. We've also supported a scheme for soil testing at farm level to include not just nutrient profiles but also carbon profiles. So this whole objective of this investment is try and create a baseline that we can then monitor and see are we changing in relation to time. So kind of that's where we're at, and I do think we've committed in terms of developing some sort of a structured framework that allows confidence to the market. But I certainly see at European level, if you look at a 2050 climate neutral Europe, you can remove only emissions through carbon capture and storage. I have no knowledge in terms of that or land management, so it is an important evolutionary piece. But just certainly from what I've seen, there isn't an appetite to say, well, look, put it into an emissions trading to offset industry, if you want to call it that, so it makes a difference there. The final then question, if you look at the peatlands development, I'm just interested in terms of, so some of the peatlands reduction is actually reducing the emissions rather than removing, if you want to call it the additive element of it. And I'm just wondering, look, what is the panel's commentary in terms of the value of that? If you know, it's all additive, it reduces, and we would see it as particularly valuable. But it isn't removing, if you want to call it that. It is reducing some of the emissions that are associated with some of those degraded peatlands. Is there a difference, is my question from an investor point of view. Sorry.
No, that's great. Thanks very much. It's really important to acknowledge the fact that baselines are being established elsewhere and that we can use them to our benefit. We'll pass on the question specifically around, just posed there.
So, yes, we are selling, in the peatland code, we are selling emission reductions and not sequestration. So I think there is a difference, and we do, like obviously the IPCC have said, to be able to neutralize, to become net zero, you need to take something out of the atmosphere to compensate, which is what we're not doing. We are reducing emissions. However, with peatlands, it's very different than some other avoided emissions. Peatlands, they are in a degraded state, they emit vast amounts of carbon. So we need an active intervention on the ground to stop these emissions and to get them into healthy functioning peatlands where they actually take out carbon again. So in my eyes, that's different, and I think in a lot of investors' eyes, they see that without that investment, those emissions will never reach our Paris Agreement targets. The same for the UK government. They obviously see the need to restore and to get the private investment into this. There's a massive public investment gap in the UK, and I'm pretty sure in Ireland as well, probably around the whole of the world, to actually get our peatlands back to healthy functioning where they don't emit so much. There are more, like for example, Natural Capital partners are now saying, well, actually the peatland codes are one of their approved carbon standards for net zero. So I think that is coming through, that people do see the need and that for emission reductions.
If I can add to that, I mean, the landscape approach lets you do a whole set of different types of actions in one place. And that's really valuable because it gives you flexibility across the system, and it gives you scale. When you go to the landscape approach, and if that's nested at a national level, you also get the ability to get much higher quality in your monitoring and your verification. If you look at the history of forest carbon, jurisdictional forest carbon around the world over the last 20 years, it's the early movers who've really won. Countries like Colombia, Costa Rica, Democratic Republic of Congo. And I think Ireland is in exactly that place at the moment with peatlands. Peatlands are the most concentrated form of carbon on this planet. You've got some of the best concentrations of peatland in Europe here in Ireland, and you've got a very important process going on to bring all of that together. So if we can create this instrument to hold a whole set of different actions that can deliver peatland restoration, it's a game changer. It's very large. I mean, the restoration directive requires all European countries to restore 30% of their habitats. That's really quite impossible. But if you think about it, if we deliver on on the potential of the peatland finance island, we'll be delivering 10% of island. 700,000 hectares of peatlands, which is the target, is 10% of the land area of Ireland. So that's already a significant achievement towards that restoration potential.
I just wanted to add to what Bill said there in terms of monitoring. Like, there is a fairly, for peatlands I'm talking about here, there is a fairly extensive monitoring network across Ireland. In addition to the 27 flux towers, there is a variety of flux towers on different, I suppose, conditions and of peatlands, like on cutaways, on intact and, you know, degraded peatlands as well, that will give us data going forward that will help inform, you know, the development of any verification system or codes into the future.
Great, thanks very much for that. I'll take another question from the room and then I'll go online. Derek, your hand was up quite quickly earlier, so I'll go to you if that's... You won!
Thanks a million, Shane, and it's a great session there. Just in terms of carbon sequestration and the reduction of emissions, I suppose to put it in context, an intact peatland would be carbon neutral or perhaps mildly carbon sequestration or sequestering up to maybe about 1/4 of a tonne per hectare per year or thereabouts for very good peatlands. Whereas, as Renee said, in a heavily degraded peatland will lose at 5, 6, 7 tonnes per hectare per year. So that's where the big savings are there. And just one thing I'm interested in the reflections of the panel, particularly Renee, is we have excellent quality peatland. The incentives perhaps with the peatland code maybe towards rewarding those with damaged peatlands. So the opportunity is there for those, but yet those that have historically managed them very well over the years and continue to deliver for our society don't have any options there. I'd be interested in your broader reflections on that, or what the latest is on that. Thanks.
Thanks. Yeah, that is a very good point. So in the UK, because of the other legal frameworks and our like what we've got in place at the moment, you should not, there's a law in England that you cannot burn on the peat anymore. So there's laws in place that you should not degrade your peatlands anymore. Therefore, it's very hard to put in a carbon market for those healthy functioning peatlands because there's a framework that should protect that. That said, we've been talking to government a lot. I think that's for the public sector to reward. There should be a very, very clear reward for people who have always managed their peatlands well, and I think that should be coming from public money.
Great, thank you very much.
Sorry, Shane, this is Adam. If you can hear me.
Yep.
My apologies. I'm being asked to leave the room here that I have in the office, so I'm going to have to thank the organisers and the participants, but make way. So thank you very much, and I look forward to continuing this conversation. And don't hesitate to reach out. My details are on the screen. You can find me on LinkedIn or through Shane. So thanks a lot, everybody, and wish you all the best.
Thanks very much, Adam. Hope you enjoy your 5-star hotel toilet you seem to be sitting in there. Anyway, we'll just go online briefly, and there's a comment first from Lucy Weir. Thanks very much for the comment, who talks about how she's concerned that the focus is on quantitative analysis here, and that counting the financial value of biodiversity capital, in inverted commas, is really problematic. It at least needs to acknowledge and recognise the qualitative analysis, the uncountable well-being factors for humans, the aesthetic value of systems and species. They remain unacknowledged under the counting approach. But however, she does acknowledge that there's a challenge in this and that the story does still matter. So we'll come back to a question from the room here again, and then we'll go for another online question.
Thanks. My name is Carol. I'm a project manager for an EIP called the Mulcahy EIP. We look after very quickly, and I just have the metric you have for water quality is what really interests me. I have 65 farmers participating in mitigation, on-farm mitigation measures, and I would love to be able to say to my individual farmer, what you're doing has now improved the water quality from bad to moderate, moderate to high, and high to thing. I can't do that, and obviously it's not possible in the UK either, and there is 3 water EIPs currently in the country. There's more coming online, I think, but there's 3 of us there for a while, and I've had discussions with them, and they can't come up with it. I can use habitat. I have to use habitat indicators, which is not really relevant to my farmer putting in a silt trap. Okay. I have the EPA, which is the monitoring for water quality in this country. They monitored streams at one maybe confluence way miles away from my farmers, which is not helpful. I have 65 farmers in a 650 kilometre square catchment, and there's one little sub-catchment. I have the 9 contiguous farmers. There is 11, but 2 of them are absolutely doing nothing to affect water quality. So through a lot of hammering, I've got 9 of them that I work with, and their stream is 2 monitoring points by the EPA. Now, sorry for going on here, but there's 2 monitoring points at the EPA, and upstream is bad, but downstream is good. And I'm sitting chatting to my 9 farmers at the riverbank. I can't explain this. You know what I mean? I've Law Pro, which is another problem we have in this country is that we have so many organisations dealing with water. I don't know if that's endemic all over the world, but we have a hell of a lot of them here, and you're bounced around quite a bit. But I want specifically to put the farmer in the centre stage here and say, right, I've done X, Y, and Z. What have I done to improve my stream? If anyone could come up with a solution for this, I'd be delighted.
That's brilliant. Thanks very much, Carol. And that outlines the complexity of this, not only in terms of achieving it, but in terms of communicating it to, you might have 65 farmers, but if only 9 of them actually take action, then, yeah. And there's also muddying the waters, for want of a better phrase, with all the different organisations involved. Okay, we'll go for one quick further question from the room, and then I can continue to rob your coffee if you wish. We'll get down to the very back there, if that's okay. Sorry, I need the mudgy.
Thanks very much, Jean Kennedy in Devonish. I'm just wondering, we talked a lot about peatlands today, and I know the carbon return on investment is more efficient in peatlands, but do you see, for example, the peatland programme in England working on farms, where you're talking about carbon sequestration, storage, overground and underground, and again, putting farmers back into the frame? Non-peat-based farms.
There we go. So a question around whether we can address non-peat-based farms in addition to the peat-based farms.
Yes, definitely. So in the UK, actually, there is a soil carbon code under development, or more of a framework put in place, because there's a lot of farm soil carbon happening. Some of it is very dodgy. Some is actually really good quality. So there are people working on putting a framework around it, so it becomes way easier for farmers to understand which ones are good and which one they should actually steer away from. So yeah, that is definitely there in at least in the UK. I've no clue if that's at the moment. Is there something in place in Ireland, something like that? Do you know? No.
Okay, right. I think I'm going to have to wrap it up here. Unfortunately, we're 5 minutes over time. What I would strongly encourage you all to do is to continue these conversations over coffee. Go and bump into somebody and knock their plate. We're going to have to wrap it up, unfortunately, because there's a few others that desperately want to say things as well. What I would politely ask is that as you're filing out, if you could please be as quiet as possible, because I know they're still talking in there, but we are trying to encourage you to mingle as much as we can, or as much as you can. But can I please have a round of applause for our panellists who have... They have travelled from far and wide to give their expertise, and they're available offline as well, as Adam had said. So do please chase them up. Not too much, though. Thank you very much, folks, and talk to you again soon.